Okay, we are going to start this hour with the strength of the U.S. economy. Fed Chairman Jay Powell telling 60 Minutes last night not to bet against America, but he added that the recovery will likely be long and drawn out. Steve Liesman joins us now with more from the Squawk Newsline. Steve, what did you make of what Chairman Powell said last evening?
If I was listening, Andrew, for how Powell sounded relative to his really downbeat assessment on Wednesday, and maybe a bit more optimistic relative to what you just quoted with the chairman saying don't bet against America. He does see a second half recovery, but he sees it lasting through 2021. And I was interested in reading both the transcript and what was aired, how concerned Powell seems to be with the idea of a second wave, potential for the second wave of the virus.
The government would have to reintroduce these social distancing measures and that you would have another downturn, and that would be bad for confidence. So that's a risk we really want to avoid.
So that's something he's really concerned about, and he's not saying that places shouldn't reopen, just really cautioning people to be careful in this process. Also talked about the need for more aid and wants Congress to be ready to do more now.
I don't give them advice on particular policies, but I would say, if I may, that policies that help businesses avoid avoidable insolvencies and that do the same for individuals. Keep workers in their homes, keep them paying their bills, keep families solvent.
So finally, he said there's more the Fed can do. It's almost reaching the limits of what the Fed can do. And while you guys are talking about vaccines, I did pull the quote here real quickly from what he said. He said, for the economy to fully recover, people have to be confident, and that may have to await the arrival of a vaccine. So I think that what you're talking about with Moderna is really news to the ears of the Fed chair. Andrew?
Hey, Steve, what did you make of, he seemed to oscillate between saying, look, we still have a lot more that we, the Fed, can do, and then at the same time seemed to be pushing Congress, and at one point said that we really need to have more inclusive prosperity, and it's not something the Fed can really lead on, given, as we've talked about before, the blunt instrument that is the Fed. So how did you sort of see both sides of that?
No, I mean, it's exactly the way to put it. The Fed can lend to all industries. In fact, they changed the emergency powers of the Fed to make it so that it couldn't lend to specific companies. It can't go in and help people who are not receiving this aid and give money to those who are at the same time. It's a very blunt instrument. If Congress wants to target specific groups' help, it has to target them itself. It cannot rely on the Fed to do specific targeting of specific industries or specific people. So the Fed now is in this place where it's trying, and we've talked about this in the past several weeks, to put this Main Street lending facility together to help companies between 515,000 employees and up to $5 billion in revenue. And it's really, really hard to design this program. I think the Fed's going to get there, but it is really going to be a difficult job for the Fed to do this kind of very specific, even though it's a broad range of companies, to do that kind of very specific kind of lending.